Hello, everyone, and welcome to TradeFinder Live. It's great to be back with you all during this trading day and during trading hours. We have a special event to get into today, so very excited to get into that. But first and foremost, we do have to cover our disclosure disclaimer agreement. As always, investment advisors in the United States, so nothing is to be taken as personal investment advice. This is always available on our website. Please feel free to read it in detail at your leisure there, or take a screenshot of it now if you like. That's the main point to take away, though. Consumer confidence numbers, this morning showed that there's a drop in confidence in both the current and future expectations in the economy. So very interested to hear what Rob has to say about that. So let's get right into it. Rob, you out there?
I am Zach. Good afternoon. Welcome everyone to TradeFinder this afternoon. Without further ado, let's go ahead and get into the chart of the markets, and then excited to bring in a special guest today. We'll talk more about that in a second, but for those of you that joined us for either the Evo Trader Live or the Hub Live sessions yesterday, we noted that we had broken above this level here at 570, which was support back from the fall of last year. And the key was going to be today, whether or not we could see some follow through. We're getting a little bit of follow through, not too significant, but if we can close here, it would count as a follow through day. Market seems to be shaking off those consumer confidence numbers that you mentioned, Zach, and they did weaken a bit, both on current expectations as well as future expectations moving forward. And we're a consumer-driven economy, so a lot depends on how the consumer views things. Put the moving averages on, you can see that we are moving above the 10-day moving average. If we were to close right here, we'd have a doji today, but obviously couple more hours here before we hit the close. I thought I would just go ahead and add in the zigzag pattern that I had drawn yesterday because we talked about, and we actually had a question that was asked during the Q&A from the Evo Trader Live session yesterday on could this B wave extension go all the way up to 61.8, and it could, which would bring us somewhere around the 590 level, which is the next level of potential resistance. But where we are right now is hanging right around that 38.2% level. If we were to turn around here, perhaps we could have a C wave down here, but we also have the opportunity to continue higher in this B wave. And as a reminder, there is a difference in the world of Elliott Wave between qualified and confirmed patterns. Right now, it's just qualified at this point in time because we've hit that 38.2% level. And then we'll see where things close today. And on the next day or two, perhaps we do move back at least to the 50-day moving average, which would bring us right around that 61.8% level. And I talk a lot about the software. If you haven't gotten a copy of the software, go to hubb.com. You get free Elliott Wave. You get free intraday Elliott Wave. Great piece of software. I know a lot of you have done it because you've been asking me a lot of questions. And one of the questions that I get is when you come over here and you go to the dashboard, on the left-hand side, as you scroll down, there's this thing called the money calendar. And I use it for technical analysis. Obviously, I'm not the only one using this software, and there are multiple uses for it. And I'm proud to welcome in the creator of Money Calendar. He has a direct relationship with the Hub organization. He's a seasonal trader and also happens to be my mentor. We all have mentors. We talk about that. You can let the market teach you, or you can learn from someone that's been out there doing it. And he was the instructor at the very first options seminar that I attended back in Miami. I think that was 1999 or 2000. Without further ado, I'd like to bring in Mr. Tom Gentile. Are you out there, Tom?
Hey, Rob. How you doing? Good to see you, man. A quarter of a century. The way you sound, the way you say it.
Oh, holy it's crap. Scary, isn't it? I know. And time has moved by so fast. It's crazy. It just doesn't seem like it was that long ago. But gosh, I remember you up in front of the room, and I was just blown away by. I'd already experienced options. I'd been trading a little bit, and how little I knew with all the things that you were expanding. I think I became like a little gnat around you, asking a whole bunch of questions of things that I didn't understand at that point in time. But safe to say that if I had not attended that seminar and you hadn't been in front of the room, I wouldn't be sitting in this chair. So I'm really happy to have you. Thank you for taking time to be here. And I thought, rather than me trying to answer the questions and explain the money calendar, you're the expert. So I'll go ahead and let you take it away and tell the folks what that is.
Yeah, well, I mean, a lot's happened in the last 25 years. And, I mean, you think about it back then, we didn't even have decent cell phone coverage back then. It was all analog. I mean, you and I could just talk for hours about what's happened in the last 25 years. But, one of the things that I've done, and I kind of call it the culmination of my work, is that after Optionetics, which I was a co-founder of and a refounder of, I started doing a little bit of more boutique-y stuff. I went to, Optionetics got bought by Options Express, which got bought by Charles Schwab. And I was a managing director for Schwab for a couple of years. And I just didn't fit in a 14,000, I think that's how many employees I had at the time, group. I like smaller, get things done quicker. You don't have to go through high-rise buildings and all kinds of craziness that happens. So I founded a company. Yeah, I founded my own company, Tom's Trade Room, and we did that about 10 years ago. And there was something I was doing then, and it was, to me, what got me to where I am and what got you to where you are is basically developing a style of trading that you gravitate to, and then creating objective rules around it, back testing those rules, forward testing those rules, so that you become a little bit more like a robot in terms of if then statements. If the market does this, then I'm going to do that. If the market does that, then I'm going to do this. And that's what trending or what rules-based patterns are. And there's trending, there's what you do, which is contrarian. There's volatility strategies, there's statistical strategies, and there's what I do, which is seasonal. So I took seasonal patterns, like, chocolate, for instance. You buy it in Valentine's Day, you buy it around the holidays, and typically you'll get patterns where chocolate companies move higher in value because of the demand that comes on them. Seasonals could be tied to products that are based on summer, spring, winter, fall. Fertilizer, for instance, snow shovels, whatever you want to call it. We found patterns on every single stock. They don't happen all the time. In fact, what I look for patterns that 9 out of the last 10 years, they worked. It had to be a 90% pattern or better. And fast forward, we actually have a proprietary program that looks at trading days to make these calculations. And we recently uploaded this program, which I've had for over a decade now, on the Hub site. And so it is available. As a subscription. But I want to show those of you that have it and those of you that don't know about it where it is. So on my screen, this is kind of where you log in. This part, Rob. Over on the left-hand side, you get the big H here. When you click on that, you get a little drop down here on the left-hand side. The very one at the bottom, and if you're not sure, click the arrow and it opens them up. You'll see Money Calendar. When I click on that, again, it gives me a calendar first. If I see mostly green, it's telling me that every pattern that's working today, Rob, the majority of them are bullish. So today's the 25th. So I see 80 patterns. Of the thousands of stocks out there, there are 80 that are giving me patterns that fit the criteria I look for. 74 of those 80 are bullish and 6 are bearish. So what I'll do is it gives me an overview. All right, so what we've noticed and I'll just let the group that's watching know this, is that even though we saw bullishness throughout the month, when I did the re-rank, and I'm going to show you how I do that in a moment, we were coming up with mostly bears. The top 10 were mostly bears for the first month. Then it changed to about 50-50 during the second week of March. The third week of March, it started tilting more bullish. We're leaning into mostly bullish side. And let me show you what I'm talking about. Let me click on the 4th. So here's what a day looks like. So if I click on the 4th, it's going to give me those bullish and bearish patterns. Now, there are different ways I rank this. I could rank it by percent return. I could rank it by average return. I could rank it by accuracy. And yes, there are some 100%ers out there. Like earlier this month, We had SYNA was a bear. That's what red means, is it's bearish. Had a 100% pattern that it moved on an average 8.5% down during the 25 days starting on the 4th of March. Here's EW, and EW is a bull, and it had an 8% return 10 out of the last 10 years between March 4th and April 22nd. All right, so there's a lot of different ways we can rank this, but the way I like to rank it is something called Power Meter. And what Power Meter does is it gives me a way to look at what the pattern did each year and get better as it got closer to today, or did it get worse? You know, what we do is we look at data. You do the same thing, Rob. I'm a data nerd. I look inside the data, and it isn't just enough to say, oh, KGC, Kinross Gold, had a pattern that had a positive power meter. I want to go in that, and I want to look at that, and I want to see what did it do for the last 10 years. Well, in 2015, the pattern didn't work, but the following 9 years it did, and on average, it just kept getting better. That's something I want to lean into. It's also why we leaned into gold, and we leaned into Kinross Gold in late February and early March. So
yeah,
going back
9 out of 10 is not too bad. I was going to ask you about the performance, but it looks pretty darn impressive.
And we're hitting that. We're hitting that this year. So it's one thing to see historical patterns. It's another thing to experience that. And this year we've had one loser. Everybody else has been a winner. I think it's over 90% win rate on the partials and the total closed trades for 2025. I think we're up about 185% so far coming into the quarter. And I mean, it's been a great positive year, especially when you look at the markets. You know, like I see behind me, markets are they're down about 3% for the quarter, I think, for the S&P, give or take, depending on the moment.
Yep.
But let me show everybody a trade. How about we give everyone a real trade to work with today, so you can follow along at home.
TradeFinder, so giving them a trading opportunity is perfect. So that would be great. And you're right, the market has been crazy choppy, so that performance is awfully impressive.
All right, well, first trade for TradeFinder today. So I'm going to go to the 25th, today's date. And what I'm going to do is I'm going to rank this. I'm going to rank it by power meter, which is what I do. And then did you notice, Rob, that back on the 4th, when I ranked power meter, I saw more red on the screen than green. Now the greens are starting to float to the top. All the good trades are floating to the top. EQT is a natural gas company. So this fits so well. Forget about the pattern, the seasonal pattern for a moment. Okay. We are in an energy bull pattern, which is about a 5-month pattern. Starts mid-February, goes to mid-July. I can layer that on top. You can also layer on top, if you really want to look at natural gas drilling right now, that there's this kind of renewed interest going toward fossil fuels, and natural gas is, in my opinion, one of the cleanest fossil fuels that you can get. Now, let's forget all about that and just focus on the pattern.
I could add one thing in there, not to mention all those data centers that are being built have said they're going to be running on natural gas. So that just makes a lot of sense.
So, but you know what, Rob? Here's the thing. As a pattern trader, as a seasonal pattern trader, I can basically deduct all that because I'm only looking at this for the next 39 days, not the next 4 years. And the next 39 days tell me this. 9 of the last 10 years, this thing's gone up in value. We had a little small loser, about a 2% drawdown back in 2017, but you can see that every other year it's gone up. And in the last 5 years, we've had, on average, better than 20%. In fact, this is calling for a 35% move projection based on all the data that we see right here. That's insane. I mean, is it telling me that natural gas is going to go up? Maybe, but what it's really telling me is that EQT is likely to move higher. So that's a trade where, and again, what are the actual dates on this? All right, so let me go back to the day and let me show you. I see, now I look at total trades because it gives me an idea that tomorrow's a good day to take this. So those of you that watch this on a recording, maybe you didn't catch it on Tuesday, maybe you caught it on Thursday or Friday. This is still going to be a good pattern, because we see a lot of clumping going on yesterday, today, tomorrow. It's telling me that basically between now and about mid-May, that's the end date on this pattern, is May 19th. All right. Between now and mid-May, 90% probability, historical probability, 22% average return, and that's without looking at the trendiness that this is having coming in. But in a nutshell, Rob, I'm a seasonal trader. I have data. I have millions of points of data that we look at, and I've taken all the rules in my head over the last 20 plus years, put them into this program that we've been running for the last 10 years. It's one of the most robust strategies and one of the easiest to understand. People get that, okay, I can buy it today and I can sell it sometime in the future because it's happened that way again and again and again. And this is the best part, is that you don't have to get you don't have to be an indicator junkie to understand seasonal trading.
Right. Yeah, that's an awesome explanation. You did an amazing job of going through that. How can people find out more about this and you and how you use this?
Okay, so I've got a webinar where I'm going to do this pattern, and I got 2 more that I'm going to be showing. This is going to be Thursday at 2:00. Ryan, if you could, if you haven't already, if you could pop in the link. You guys can register for the webinar. It's free. I'm also going to do a special report, which is 8 stocks that I'm looking at that are tariff stocks. So I'm doing the program I'm doing is called Tariffs and the Best Patterns I See in the Next 30 Days. This will be Thursday, 2 p.m. live.
Wow, hey, the timing's great because, gosh, we hear that word tariff how many times a day? It's amazing. So the timing of that's perfect, along with the data behind the money calendar and the trends, et cetera. So it's current as well. So awesome explanation, Tom. I can't thank you enough for spending some time out of your day to come share all that information with you. No way I could have done it any justice. So I appreciate it very much. Great to see you as always. And everybody sign up for that event on Thursday. As Tom said, it's free. So learn how to use this great tool in the software. So thanks, Tom. Appreciate it very much.
Awesome. All right. Thanks, everyone. Thank you, Rob.
All right. Take care, Tom. All right. That was great. Hope everybody enjoyed that. And hopefully got my screen back. Ryan, Zach, can you confirm that got the screen back here?
Good to go.
Yeah, you're all good.
All right. So yeah, that was great, and again, very much appreciation to Tom for taking time out to go through and explain that. I hope everybody will sign up for that event, and those of you watching the recording, hopefully you're watching it before Thursday, so you have the opportunity to take advantage of that as well. You could see the amazing potential there. All right, so here we are with the market today. It looks like we might have taken a dip down just a bit, so let's go ahead and move to the live chart. I like to look at the 3-minute chart. Let's see what's happened. Yeah, we have had a little bit of a move down since we started. And gosh, if that doesn't look like an intraday zigzag, I don't know what does. So we'll take a look here. It'll be interesting to see how we move look at that, right up to that 61.8% level. So you're seeing, based on what I show you week in and week out and what Tom just showed you, all the power that's in this software. So once again, hubb.com, get a copy of it, and there's just endless uses for it. But this could be, now it's not confirmed yet. It is qualified, but it won't be confirmed until we take out that A wave low. So that's how zigzags work, but it's qualified because we're right at that 61.8% level. And we'll see how the afternoon plays out as we move into the close, and that's going to be really key as far as going back to the daily chart on whether or not we finish with a follow-through day today or not. If we close lower than yesterday, just as a reminder, that does not count as a follow-through day. It has to have a higher close today. Even if it closes above 570, if it's not a higher close, that doesn't count in the realm of confirmation days or follow-through days. All right, let's take a look at the rest of the markets real quick, and then we'll get into some Q&A. Here's the DIA. moving up, touching that 30-day moving average. But as a reminder, I don't look at the 30-day moving average for support resistance. I use the 10 and the 50. The 30's on there for crossovers between the 10 and the 30, which I was taught by market makers years and years ago, and as an early indication of what may happen with the 50-day moving average. So it did hit it on the high, but I don't view that, again, as a turn on resistance. But you can see the potential formation of a zigzag there as well. Going to the Qs, we'll look at the bond market here in a second, see what it's doing. Rates ticked up yesterday, even though the market went up, which was kind of interesting. We are continuing to break out of this ascending triangle. So we break to the upside here, and we're a little bit further, perhaps, to move to the upside. But unlike the S&P that is broken above that resistance level, we're not even to the resistance level on the Qs. And the breakout from this ascending triangle, which is the mouth of the triangle, you measure the high to the low, that gives you the potential breakout move from the point. Could be up or down, even though it's an ascending triangle. It could have been downside breakout. It happened to be upside, but that doesn't get us above resistance at 500. It just pretty much takes us underneath there. So a lot more work to do on the Qs. So before I go to the IWM, let's take a look at the bond market. We'll look at TLT, and once again, a little bit of a dip down, although at this point, rates are a little bit lower because prices are moving to the downside here. So rates up, but we'll have to wait and see where things go into the close today. Continuing maybe that downside breakout, but we'll have to get prices to come back down to show that. So right now, prices up, rates down from yesterday, and we'll see if that holds into the close. Interesting that the market has reversed, even though rates are ticking down a little bit. So the past couple of days, the normal relationship between rates and equities has not been the same. I know you like the TNX. We won't have the live show on that, but you can see that we had the breakout in rates yesterday, but that'll be a tick down. It gives us end of day on the TNX. And now let's go take a look at that IWM that is so sensitive to rates. And as you would expect, we're ticking back down just a little bit because things are moving opposite directions right now. So we had the upward move on the IWM with rates going up yesterday. Rates are coming back down, and yet the IWM is coming down. So kind of a weird couple of days here to start the trading week in the relationship between the bond market and the equities market. And note that that wave 3 is still green. So the wave 3 is still active. There is a potential that we have a complex wave 3 going on here, and we could be building a zigzag here, which would mean the potential for, you can see that bar. People always ask, how do you know where to draw it? Well, a little bit of common sense always plays into all this technical stuff that we talk about. That obviously was a big impulsive move down that started this A wave. And we're bouncing up here and also around that 38.2% level, potential resistance here, which would bring us down past that 3. And if we stay with this being a wave 3, then that 3 could move over. But if we continue higher, because again, it's qualified but not confirmed, we could still bounce higher in the IWM. But odd things going on between the bond market and the equities market right now. Does that have something to do with consumer confidence today? We'll have to wait and see over the next couple of trading days. For those of you that are subscribers at ewotrader.com, we'll have a lot to talk about in Thursday night's insiders meeting, obviously. So let me go into the metals real quick. So I'll breeze through this so that we can get to the Q&A. Gold holding here above that 10-day moving average. We closed right on top of it yesterday. We had tested it on the low on Friday. So holding above that, and a little bit bigger move in the SLV. So we've talked about how silver needs to play catch up, and at some point in time, it will. I was curious yesterday if we were coming down to test the point of this triangle breakout, but nope, we reversed today, heading back up, and we'll see if we can take out this wave 5 high here and then continue to move higher on SLV. So we'll keep a close eye on how SLV trades over the next couple of days. Maybe this is the time when it catches up to the move that gold's had. You can see not nearly the upward move that GLD's had, even though we still had a symmetrical triangle for the breakout. Looking at energy, Tom was just talking about natural gas, and the trade that he gave you was EQT. Just as a reminder, EQT was the right. So you get, we look for trade opportunities in TradeFinder. That's what we do. And so if we look at what natural gas is doing today, it's hanging right around that 50-day moving average. We kind of surmised about this yesterday if we needed to come down and test that 50-day moving average, and we are. And so we'll see if we bounce from here and move higher. And as Tom noted, the EQT is it's a company. It's not natural gas itself. So you would think with this big move here in their next earnings report, which I'm not sure when that is, it's probably going to be a pretty good earnings report with this move. But we'll see if natural gas itself holds this 50-day moving average and stays within this potential upward zigzag. We get awfully close to the 61.8% level there. And you could say that, well, I got really close, so it satisfied it. And you can make an argument for that. But I've just noted over the years that normally those fib levels actually get touched. And we haven't touched it yet, so we'll see if there's a reversal there. Moving to oil, ticking back down again after a move up yesterday. I mentioned yesterday that we were about at the point that you would expect in this small triangle here. We had a small symmetrical triangle, broke out, and we're kind of running out of gas here at the 50-day moving average, which makes a lot of sense. And if I've said so many times ad nauseum that we likely are going to stay in this big trading range, I feel, just my opinion, probably throughout 2025. We could test the high, we could test the low, but I'd be really surprised if we broke above 80 or below 65 on oil throughout the rest of the year. We'll take a look at Bitcoin, which is trying to break to the upside out of its own symmetrical triangle. We are just a little bit above where the close on. I know it trades 24/7. I understand that, but it also has a calendar rollover. So when you're looking at end-of-day charting programs, you can get daily bars, just like you can in any other security. So the cryptos do that as well. And we'll see. We haven't taken out the high yesterday, so I'd still like to see that. Even if we close higher, you could count that as a follow-through day, but I'd really like to see it trade higher as well. So a weak follow-through so far on Bitcoin, even though we're up at the point. And Ethereum, we were talking about this yesterday, looked like maybe it was doing something. Calm down today. Gosh, someday Ethereum is going to take off, maybe. Who knows? But we've got this area here. Talked about yesterday, this old pattern I used to talk about a lot, the launchpad effect. When you have a stock that really consolidates sideways and then moves up, you get like a blast off effect. But not doing that, not following through on that today. Looking at the one everybody's so interested in, XRP, which hasn't broken out of its triangle yet. So kind of lagging a little bit now when it's been the better performer for a while. And, that kind of makes sense. The ones that have been leading, money in the market tends to rotate to those that are underperforming. And so since this one's been doing so well, maybe we're seeking out other opportunities in crypto land. We look at Solana having a pretty decent follow-through day today, better than the other three that we just looked at, Bitcoin, Ethereum, or XRP. So perhaps that's where people are looking. Same type of pattern here with this sideways move, and it's giving a little more indication of that potential blast-off effect but we're at a point of resistance. So we got to get above this level here. If we can, then we might have something really going in Solana. But note that it's still in a qualified 5-wave pattern to the downside. Pardon me. I got the same thing in my throat that you do, Zach. So this bounce up here in the wave 4 could continue. And we're only at 22%, but it did label that 4. And likely we're going to move a bit further than that because the 23.6% level is probably the weakest of all fib levels, in my opinion. And then we'll go to Cardano. The one that I've mentioned so many times was the big surprise that it was included in the basket for the strategic reserve, had that big massive move a couple Sundays ago, came right back down like all the cryptos did. We've been consolidating right through here around 75 cents. It's trying to move higher as well, but it's got some work to do before we can start looking from a bullish standpoint there. It's got to get above this upper trend line, I would think, before we see any sort of significant move there. We'll look at a couple international markets real quick. We'll look at the INDA, see what's going on in India. Had a pretty interesting move to the downside. We had our triangle. We've actually exceeded what the expectation would be on the breakout from this triangle. So back to the India market here, it looks like. And again, that rotation that occurs looking for things that have underperformed, and the big downward zigzag that we had, obviously we were due for a bounce. Now the question is this just the wave 4 bounce and we're going to have a new low in the INDA, whether you trade the INDA or the Nifty? But that was one heck of a breakout move. So pretty vertical move there for the wave 4 correction. And even though it's an upward move, remember in Elliott Wave terminology, a corrective move is just a move against the previous impulse. And this C wave was an impulse to the downside. So the corrective move is to the upside here up in the wave 4. Is that going to hold? It is colored purple. So the algorithm at least thinks that might be the end of the upward move. So it might be tempting to jump back in to the INDA, but I think let's just wait a few more days and see if we're able to move higher than that since it is colored purple. Be a little cautious on getting too excited about going long the INDA or Nifty at this moment, and there's some separation from the 10-day moving average, so we're a little bit overbought with that vertical move, but pretty interesting there. We'll look at the land down under with the Aussie market, and getting a little bit of a bounce there, perhaps being aided by the metals hanging in there. Very resource-rich country, but we're at this area of resistance, so you can't get too excited until we break above this level around 24. If we do, and that wave 5 is indeed done, it's colored purple, so the algorithm thinks that might be the end of it. It is confirmed, so maybe we bounce back up towards this wave 4. So we could have some more upside in the markets in Australia, but let's wait until we break above 24. You can see that acted as support back at the end of December and the beginning of the year, and it could be resistance here. So again, a little bit of pause. Don't jump the gun. Something to watch. Keep on your watch list, but don't jump in yet. Canada, which has been performing way better than I thought it would with all the tariff talk, et cetera, and all the commentary back and forth between the U.S. and Canada, et cetera. You would have thought, I would have thought, that it would have moved lower through all that. It did move down, but not as much as I thought it might. We've bounced back up here. We're right around 42, so we're right in this area here where we could find resistance on the Canadian market. If we can break that, we're getting close to that 78.6% level, which would disqualify this 5-wave to the downside pattern. We're not there yet, but we're getting there, and we'll see if there's a little bit of resistance where we are right here as well. Just like with the Aussie market, we're pretty close to a significant resistance level. But if we can break above that, then we may have something going on there. So some things looking interesting internationally, at least. And then I thought I'd throw in China. We probably heard about President Trump's tweets yesterday that anyone that's buying oil from Venezuela, because he feels like they're exporting some of their gang members here to the U.S., and he wants that to stop. So anyone that's buying Venezuelan oil right now is going to face a 25% tariff on top of any other tariffs. And the number one purchaser of Venezuelan oil is China. So that kind of put a stop to that upward move here. And we're right back to the point of the triangle. So that's what usually happens. You have these triangles, you break out, you come back and you test the point of it. That's what's occurring here in China. So we'll see if this holds here. We are under the 10-day moving average. So we've got to watch this and see if we're headed back down towards the 50-day moving average, which we could. But the wave 3 is still green, so it's still active. So the algorithm doesn't think necessarily that that's the end of the wave 3 and that we are for sure in a wave 4 correction here on China. But certainly the news and rhetoric from yesterday wasn't super bullish for the market in China. All right, so with that, Zach, I'll go ahead and open it up to any questions. I'd go ahead and show you the chart of the VIX while we get ready for that. And then we'll do our case study consideration. We'll give you a bonus one. Tom gave you one. We'll give you another one for today as well. But for now, looking at the VIX, the comment that I made yesterday was, will we get back below this 17.5 level? And we're trading right there, as you can see. So if we break back below that, we do have the possibility of coming down to 15. That would indicate a further move back to the upside in the market. It's pretty interesting here that we had this more vertical than normal kind of trending move up in the VIX and then right back down. So following that same motive of going too vertical, too fast, vertical moves will go straight up, oftentimes comes straight back down, even holds in the VIX. So Zach, if there's any questions, happy to take those now.
Yeah, sounds great, Rob. That's an interesting chart indeed with the VIX there. I do want to remind everyone real quickly before jumping into the Q&A to take advantage of registering for that special event with Tom on Thursday. It's in both the chat and the description, so make sure to register there. We'll get into the first question, which we've had a few requests around, and that's going to be Meta.
Yeah, had a interesting start to the day. We'll see where it is now. Bouncing, and gosh, look at that. If we were to close here, that'd be concerning because we're at a perfect doji at the moment. So we opened, traded a little lower, rallied up, hit the 50-day moving average on the high, which also coincides with a little bit of resistance here. It's not massive, but it's where we got turned back in December and again in January before testing 600 and taking off in February, coming right back down to that same level here in the 600 area. And there's just such a massive corridor of potential support here on Meta. Even if we don't hold 600, we come back, we've got 575, and then we got 550. So you could be, if you're long or bullish on Meta, you could stay constructively long unless we break down below 550. Then that changes everything. But anywhere in that range, and it's a big range from 625 to 550, you could find support or resistance in Meta. But if you're itching to go long Meta, again, just hang in there, be a little more patient. Let's get above this level here at the 625, 630 level, back above the 50-day moving average. And then we could foreseeably turn and run back to test those highs from February. But we have to get above this level first. So let's wait and see if we get turned back here on the 50-day moving average and this resistance through here. So update today, but don't get too excited yet. So far, we're just bouncing Now, unlike a lot of the other charts that have qualified 5 waves to the downside patterns, this has a 5 wave to the upside pattern. So we could break above that level, but I think it's prudent just to let's let it break it first, and then we can go from there and see what happens at that point in time. But a really important level that we are right now, but it could be exciting if we break above it. So once again, keep it on your watch list. Keep an eye on it.
Thanks, Rob. You might have expected this next one might be coming, and that's AMD.
I think did we skip a week last week, or did we have that one last week too? But we've had it a lot, and like I was talking about with that rotation thing, people talking about Intel as well, which is has greatly underperformed. But this move to the downside here, we got to the top of the tap box here on the wave 5. Maybe that wave 5 is done. The algorithm has confirmed it. So if that is indeed the end of it, and no better pattern than to have a perfect doji at where a wave 5 is labeled for potential turnaround. So moving back to the upside, tiny bit above the 10-day moving average, but we could easily see AMD continue with this bid, barring anything unforeseen in the market itself. As far as a potential big move to the downside, going all the way back up here to the wave 4. We're not getting quite the follow through above that break of 110 yesterday that you would like to see, but anything can happen in the last couple hours of trading. Maybe we do close higher and get the follow through day. The thing that's concerning me really with where we are now, obviously it seems like we're leaning a little more bullish. But all these gaps, because of the gap up that occurred yesterday morning, and then we had the PMI numbers that came out better than expected, especially on the services side, furthered when the futures were already up and gave it another leg to the upside. And now the consumer confidence numbers seem to have stalled the momentum from yesterday, at least for now. Maybe the market shakes it off and we continue higher. But I'd keep an eye on where we are here. And if we can break above the high of yesterday's bar, then I think that would be a pretty good entry, at least back to the previous 4.
All right, from AMD, let's head over to NKE.
Good old Nike. Gosh, did they make some not so bullish comments in their earnings report. I know companies have gone through this whole mode of wanting to underpromise and overdeliver. A lot of companies, Microsoft used to be a big one at doing that, where they just would be very conservative in their guidance. But there's other issues that were listed inside their earnings report as well. And so we're just kind of sitting here following this move, going sideways, allowing that 10-day moving average to come back down. And perhaps we need to consolidate a little more sideways there. You can see that this was also in our AI identified this as a potential continued move lower, but the score was very low. So you wouldn't want to trade that from a bearish standpoint because the score is too low. If that score was 75 or above, you would think, okay, we've got more to go to the downside. And maybe we do, but with such a low score here, you would kind of lean more towards fading this potentially back to the upside here. It's not cooperating today, but we are oversold from the 10-day moving average. The problem here, and this is why you always want to look at the broader scheme of things, is all of the commentary that they made in their press conference just seemed to really squelch the momentum that Nike had been building. You can see that we had this test of support here and had broken to the upside, and it seemed like everything was going well. And then their earnings report comes back out, and it's like, there's this could be under promise to an extreme. So I think we keep an eye on that one, but there is the potential of fading that back to the upside. That's why we didn't send that out as an alert, just because the commentary was so negative. We kind of want to see some of those things play out just a little bit. Manufacturing issues, stuff like that, was in their commentary.
All right, we'll follow that up with LMT for Lori.
LMT. Good old Lockheed Martin. It's we have Northrop Grumman, we have L3 Harris in Florida, where I grew up. Lockheed Martin also has offices in Central Florida, but primary one near Atlanta, and Martin Marietta as well. So you look over here, we did make it into the tap box. We're testing that wave 5 low. The algorithm has confirmed that we are in the wave 5, and maybe that could hold. But I'm not sure if this was earnings, whatever happened on Friday. I'd have to go back and look and see. But something pretty negative came out on Friday, obviously. And the question now is, can we hold this level right here? If we can hold this wave 5 low, then you could see a bounce back to the upside here on Lockheed Martin, back to the previous 4, if we indeed note that 5 is done. If we take that wave 5 low out, then we could come down all the way down to 350. Maybe we don't go near that far. President Trump says he wants to build up the military, even though he's anti-war conflicts, et cetera, but he still wants a strong military as a deterrent. So you would think budgeting-wise, they should be in pretty good shape. But let's wait and see if this wave 5 low holds. We're getting a pretty decent bounce today. We're a little bit oversold from the 10-day moving average. If you want to be really more cautious, and as you know, I like to give both aggressive and conservative viewpoints. I think it's likely we go up and touch the 10-day moving average here, so that could be an aggressive short-term move. It's not a huge move, maybe 10 points or so. But if you're a little more cautious and want to wait, a little more conservative minded, you would want to see it break up above this 475 level. And then clearly we're on our way back to above 500 at that point in time to test the previous wave 4. So if you have speculative money and you're very aggressive minded, you could look for a short-term move here. And again, that very short term, when I talk about these overbought, oversold bounces back to the 10-day moving average, we're looking at 1 to 3 days normally. So you don't give it too long of a leash on something along those lines. I haven't looked at Lockheed Martin in a while, so good one.
Yeah, that was nice for a change. And I just wanted to pass through this comment here from Mr. Pickle to hear your thoughts. Rob says, have to say the Elliott Wave software has been continually wrong time and time again on the DIA, SBY, and triple Qs, constantly changing count so much that it becomes useless to try and follow the count. Works much better on individual stocks, in my opinion.
I disagree. That is one of the big comments regarding Elliott Wave, is that it relabels a lot. I think it's been pretty darn accurate on the market itself. And I think we have a lot of commentary that would disagree with those comments. But the market is ever changing. It's dynamic. It's not static. And we've talked about this. We go back, we're exactly where we were 9 months ago. Where we are right now is where we were back July of last year and heading that way in June. So it's been a lot of sideways movement here. Elliott Wave is a directional indicator. We really haven't had direction. So when it looks like we may have a directional move, if it fits within the algorithm, it'll label it. And if it breaks that, it will unlabel it rather quickly. which to me is one of the greatest benefits of Elliott Wave. I just view it differently. Nobody knows for sure where the market's going to go. Nothing's 100%, and you better have an indicator. You hear Tom talking about technical trading systems, and that's what I utilize, Elliott Wave being a big part of it. We have AI adding to it now, and also the confirming indicators that I like to use, like the ADX, DMI, money flow, and CCI. And you have all those indicators as well, trying to give you help. And you can see that when you look at the DMI, it's telling you that the strength, the ADX measures strength of a move, is waning here on the downward move. We don't have a crossover between the two directional indicators yet, so technically the sellers are still in control, but not by a whole lot. And when you don't have a 5-wave pattern, that's where the zigzags come in, which is all part of Elliott Wave. So Elliott Wave is a lot more than looking at 1, 2, 3, 4, and 5. So anyone that says that it's not the software is programmed exactly to the algorithm that Elliott wrote. So when someone's saying the software isn't labeling it right, you're saying Elliott Wave isn't labeling it right, because this is not a personal adaptation of Elliott Wave like a lot of other software programs are. This is programmed exactly stone for stone with the algorithm as written. And I showed the zigzag at the beginning of it. And if you do want to see a pattern, I've shown this the past couple of weeks, how you can change the data count here and go a little bit shorter term to where the algorithm will only look at the last 100 bars. And it shows that we were in a wave 3 to the downside, which means we're likely going to bounce. I don't know how that's not accurate. It's exactly what's going on. So I think perhaps maybe learning a bit more about the intricacies of Elliott Wave. Nothing, in my opinion, nothing worth having comes easy. And Elliott Wave is extremely complex. And if you're going to use it as an indicator, you need to have a really deep and full understanding of how Elliott Wave works. And so when the 5-wave pattern goes away, you immediately know you're in a corrective pattern. And so what the first thing that I look for are zigzags, because I like to trade those. It could turn into a flat or a triangle, but the first one that I look for is a zigzag. And as I showed, we are qualified at least in a zigzag pattern. It's not confirmed yet. So, if you think, okay, well, we're going lower, well, you're guessing. Qualified and confirmed are not the same thing. So you watch, we wait for where the B wave ends. We don't ever jump in until the B's done and we know that we're down starting in the C wave, and then that's where you come in. So I disagree, but there's a lot of people that don't like the relabeling aspect of Elliott Wave, but so many other indicators lag so much when the market changes that you're stuck on the wrong side for longer than you would be if you adjust with Elliott Wave. So that's my opinion.
Very well. Thanks for that explanation and insight there, Rob. We'll go over to NAK, triangle breakout. Now what? Manuel asked.
So look at NAK, Northern Dynasty Minerals. Now, that's the definition of a breakout. Holy cow. So we had the ascending triangle. Again, corrective pattern within Elliott Wave and big, massive move to the upside. It looks way overdone. So as far as now what, normally what happens when you have the gap on the second day, obviously after we get the breakout and it holds into the close, there's going to be a lot of short covering that comes in, perhaps some buying as well. Let's add some volume on here. And yeah, you can see that's a combination of buying and short covering. And we're back to the upside today if we hold this into the close higher than yesterday, but we're too far from the 10-day moving average and we're too vertical. So I would be quite cautious about continuing to go long here. The mineral space is helping to create fundamental backing for this technical breakout. I don't know if that was an earnings report. I'm not sure what the news was that caused the breakout, but we are getting just a bit overbought right now, and we have to watch to see. One of these following things is going to happen when you get this far overbought. We either come back down towards the 10-day moving average, which it had a chance to do today, and it hasn't. We tend to go sideways a little bit and allow that 10-day moving average to catch up, or perhaps some combination of the two, which I call backing and filling, where we move down a little bit, back up a little bit, and we let the 10-day moving average catch up along those lines. But I think that the question was, what's next? I think some consolidation is next. Don't necessarily mean that the whole move is going to get retraced, but I think we're going to have some consolidation. We need that 10-day moving average to catch up. If this catches the eye of it's not at $5 yet, so the mutual funds that even have aggressive growth as their investment objective can't own it till it gets to $5. But I'm sure they're watching these kind of moves, and we'll see if it can continue to move up. If it could get higher, I know $5 is a long ways away when you're at $1.25, but that's when it would really become more mainstream. But hopefully you caught that move, Manuel. And if you did, congratulations. That was a great spot. But we're overbought from the breakout potential here, and we're a little bit overbought short term. So I would keep an eye on it and see if we let that 10-day moving average catch up. And if there's not a whole lot of give back, then perhaps we can get another leg higher. But I think at this point in time, we're in wait and see mode. Now, if you're in it and you're already long, I don't see any reason to get out unless we take out that close from yesterday. If we take that close out, then I think you want to take your long off and see if there's any potential of coming down to fill this gap. With that kind of a move on that kind of volume, those are the ones that usually take a bit longer to fill. Filling gaps is going to happen usually at some point in time. Not 100% of the time. Maybe it never gets filled, but 94% of them, based on our AI data, get filled. So still 6% of gaps never get filled. But we don't know when. Sometimes they get filled right away. Sometimes it takes some time. But it seems like if this wanted to sell back, it had an opportunity today, and it hasn't done it. So it feels more like this wants to try to hold the move and go sideways. But I'm not sure we get too much more to the upside yet until we calm down, at least for a couple days, and let that 10-day moving average catch up. But yeah, so if you're in it, I would watch yesterday's close. If you're looking for an entry, don't chase it right now. Wait a little bit.
Thanks, Rob. Quick question from Jay that some others might be wondering. Is that simple or exponential in your MMA?
The moving averages that I have on the screen, I have the 10, 30, and 50-day moving averages on there. And I went through the 10-30 cross, the 50-day moving average. They're all exponential. And for those that are wondering what's the difference between a simple and exponential moving average, a simple moving average weights every single day. Like if you have a 50-day moving average, every single day is weighted the exact same way. But if you have an exponential moving average, it gives more weighting to the more recent days. So what happens today is weighted more heavily than what happened 50 days ago, which I think makes sense. We want to know what's been going on through the time frame, but with where we are right now, that matters more, I think. So I use exponential moving averages. So all three of those, the 10, 30, and 50, are all exponential. Now, investment companies, because they're long-term buy and hold, right? They don't want quick turnovers for tax reasons, et cetera. So they buy and hold. When you buy and hold for the long term, one of the indicators they look at is the 200-day simple moving average. So when I put the 200-day moving average, I do use a simple moving average for that because that's what the institutions look at. So that's what helps them determine whether or not they want to stay in a position for more time, or if it's time for them to close it out. So yeah, good question.
Yes, indeed. And I see we're coming up a minute before time. We still have tons of well thought out questions outstanding per usual. We wish we could get to all of them, but with time constraints and Rob being generous to give us this free hour of his time, We only have time for so many in this session, so I'll pass through a quick question and comment, and then we'll go over to the case study consideration. Question from Jasper: can you look at the inverse triangle on DHI? Is it played the same as a normal strangle?
We take a look. Normally, yes, triangles can have strangles, and so we had this triangle here with a big break to the downside and forming another one here. And gosh, it's right at all this level of, so we broke to the downside, and we did the same thing here, where we had this sideways move, broke up into a symmetrical triangle. D.H. Horton has been doing a little better than some of the other home builders, because home builder sentiment numbers have been horrible the last couple of weeks. Last month or two, with the long end of rates ticking up a little bit. It's kind of stopped that, but they have some other things going on, if you look behind the scenes, that have helped them work a little bit better. If that wave 5 is done now, it hasn't reached the tap box yet. We're in a confirmed wave 5, but it hasn't reached the tap box yet, so there is a potential for another downside breakout that could bring it down here. So yeah, I think a strangle is a great way to play this. Right now, you look for about a 10% breakout move to make sure that a strangle has enough room to build profitability. So we're at 130, so we call that like 123 or 4, and the high 134. That's about 10 points. A little weak on the potential breakout move. You want 10%, so that's a little bit of a deterrent. So I wouldn't expect, if you put a strangle on a big return, unless it's an outlier. Now, we've shown charts throughout the day today that have exceeded their breakout targets, so perhaps DHI could do that as well, but that's what it would need to have a really good strangle. But it would be, especially with where we are right now, a pretty good trade setup. It's probably the best trade setup for a stock like DHI right now, especially with the sector that it's in, and all the noise around home builders, et cetera. So yeah, I like the strangle idea.
Thanks, Rob. Just a quick comment I wanted to pass through to you from Constantine. Hi, Rob. I was early today with a put calendar spread on SPX. It was good after I sweated a bit, 3 to 4 minutes more, and almost would have doubled the profit. So I wanted to pass that through. And I see we are 2 minutes after time. So if you want to transition over to the creation, by all means.
Bam. And there wasn't anything too exciting on the AI side of things. So what I thought I would do is please the masses here. And we're going to take a look at PLTR. Surprised that wasn't asked. Whoops, forgot to move it to the new exchange, so that you have the full data here. And we had talked about how it was trying to sneak to the upside. The fact that we're consolidating yesterday's breakout move, I think, is pretty positive. So we're not going to post this as an idea. This is going to be a post that I think PLTR could continue higher and satisfy the rest of that breakout move. So I can show them the difference between a post and yeah, Zach. So.
Alrighty, sounds like a plan. We'll transition over to the platform now. Everyone should be able to see my screen. And as Rob said, this isn't going to be an official idea as we do some weeks. So this is just going to be a post, which is, you could equate it to a discussion board. Essentially, the criteria is not fully met to be an official idea. And if it were to come to fruition there, then we would submit it for it to be a full idea, as if you were paper trading with the real risk on the line and timeline, duration, all of that. However, Rob alluded to that this is going to just be a post, which we will make pretty here in just a few moments for everyone to go ahead and interact with. But other than that, this one will be short and sweet for this week. And I'll give it back to you, Rob, to wrap things up.
Thanks, Zach. Yeoman's work, especially with our special guest. Thanks again to Tom Gentile for coming in and explaining another great feature of this software. And just a final reminder, sign up for that event. You saw the potential there, the seasonality, and he's an expert at those kinds of trades, and gives you confidence when you know that you have 10 years of seasonality information behind you. So it makes a lot of sense. So thanks again to Tom for joining us. I hope you enjoyed that. Sprinkling a special guest, hearing somebody else's voice besides mine at one point in time. And thanks as always for spending some of your trading day with us here at TradeFinder. Hope you found this informative. Have a great rest of your trading day. We'll see where things close today, because we've got a lot of the stocks that we looked at that have dependence on the closing prices today. So thanks for all your questions and stock symbols to look at as always. And you always come up with good stuff to look at. Just love doing this TradeFinder show. Thanks again. Look forward to talking again soon. Take care, everybody.